Hello everyone, welcome to our YouTube channel. Today we are going to show you different ways in which KEEV can help you trade. And how you can use the KEEV trading platform to execute your trades properly. So moving forward, let's check. Right. So here we can see that the live Bank Nifty trading chart is the Bank Nifty future chart is showing. So once we open it, we can see. So currently I've selected the 5-minute chart. You can select whichever time frame you're comfortable with. So let's start with the thumb rule of any technical analysis is to start with the higher time frame and in the slow motion analyze the time frame lower to it. So let's start with the Bank Nifty daily chart. So here the future chart, we can see that the all-time high has been trading around 44,600, and currently Bank Nifty is trading around 44,450. It is important to note that today is the 8th June expiry. At the same time, at 10 o'clock today, RBI is going to release its credit policy for the coming month. But it updates every month. So for both these reasons, the premium for this month, for this expiry, are going to be a bit high. And we are going to try to earn from the premium crash, the IV crash that is followed by any important announcement, especially the RBI credit policy announcement. So here we can see that the all-time high is around 44,500, 44,600. And the swing low for the daily chart, that is around this low, after which it has been a continuous upward momentum, is around 44,400. So this is how you basically see the brief of the daily time frame chart. And to move forward, we'll see how the hourly chart, how the hourly chart is performing. So here we can see that it is exactly from this point, as we saw in the daily chart, it has shown an upward momentum. And from the hourly chart, we can see that this section, that is around 44,500 and 525 and 44,500 has been a short-term resistance. As you can see from 1, 2, and 3 points here, after which, after all these 3 points, there has been a downtrend. So this can be seen as a short-term resistance for Bank Nifty for today, and which we'll see move forward how even the 5-minute or the 15-minute chart is shown. So let's take the 5-minute chart. So here you can see that Bank Nifty gave this breakout today around 44,400 and 44,424. So this breakout is actually, it can be a flag or a rectangle breakout. It depends on how you see it. So we can see that based on this breakout, the minimum target price for Bank Nifty just going forward can be approximately 100 points. That is approximately towards 44,500. But we can see that on the daily chart, then the hourly chart around 44,500 is a bit of a resistance. So let's see that. Okay, so in the next 2 to 5 minutes, the RBI credit policy will be declared. So before that, I want to create an option position. Basically, I want to sell an option. So let's see from the option chain how Bank Nifty option chain is being viewed today. So as you can see here, the current spot is around 44,400 and the future price, as we saw here, is around 44,470, 44,500. So from this spot, we can see that the ATM spot is being traded, ATM straddle is being traded at approximately 230, 240, 103 on the call side and 121 on the put side. So let's see this. I can see that the Bank Nifty is in a proper upward momentum. So I want an exposure which is a bit safe, and at the same time, I want to earn from the IV crash, which will be followed by the credit policy announcement. So I can see that the put prices are trading at around 56.87. That is 44,300 and 44,200. Let's check the chart once again. So as we saw here today, that Bank Nifty gave this breakout. So even from a beginner point of view, we can see that there is a possibility of a pullback here. So we can see, we will try to check that with indicators as well. So if we put super trend, we can see that the super trend is around 44,300. And so super trend is a simple, but at the same time, a very important indicator to show how the momentum is going. So we'll also cross-check it with the EMA. So you can see that the 9 EMA is currently at near the pullback level here. So we can see that if there is a pullback, then there is a high possibility that the bank nifty will fall till 44,400 or 44,300. So to get exposure on this position, let's sell 44,200, a bit safer side put option. You can see that it is currently trading at around 58. So we'll place the order here. As you can see that a put sell, as we know that it is basically a bullish position where we are assuming that the bank nifty spot and the future will be above 44,200 for today's expiry. We'll place the order here. I selected the option type as market rather than limit because I want the order to be executed quickly based on the strategy level, and I want this position to be intraday. So I'll just quickly place the order. We can check the order from our order book here to find out exactly at what price we have executed this trade. You see that the sell order today at at 10:02 was executed at 52.95. We can cross check it with a broker as well. So this is the current position. As you can see, it is after 10 o'clock now, and we are earning from the IV crash. We can see that after the RBI announcement, the RBI announcement is still ongoing. We can see that this is the movement of the bank nifty price that there is a high volume upward momentum right now. So because we are a bullish position at the same time we are a kind of a neutral position. We are earning from both the ends of the spectrum. We sold the 44,200 put at around 52.95, approximately 53 rupees. It's currently trading at 46. So it is a 25 lot price situation. So currently we are not in a hedge position. We are in a naked position. So we need to make sure that whatever our trade is, it is it is being set at this level. So and let's see to compare it. Let's see how we can hedge this position. So there are two ways you can hedge this position. You can either buy a put option or you can sell a call option. By selling a call option, where you are already in a put sell position, you are also mitigating the risk of a downside momentum. When in a put sell, you are holding a position of a neutral to neutral bullish. In a call sell, you are holding a position of a neutral to neutral bearish. So as we saw from the chart earlier, let's quickly see it again. That adding indicators to the chart. You can choose whatever indicator you feel like. For me, I'm comfortable with the 21 EMA. So you can see that 21 EMA is currently at the pullback level, at the level that we saw earlier might be the pullback. And the super trend is moving as the price is moving. So let's toggle on to the daily chart for a second. We'll see how we saw earlier the resistance could be. Yeah, I'll quickly just so this was the all-time high around 44,650, and this was the most recent high 44,500. So we can see currently that Bank Nifty is currently at that all-time high resistance level for the future chart. So to sell a call, we think that so currently if you see that on any all-time high breakout, there is a very high momentum and a high volume breakout that is required to continue with the momentum of the breakout. That can be either bullish or bearish. So here, obviously, because it's an all-time high breakout, it will be a bullish breakout. So here, currently, it is not advisable to enter into a call sell position. You are either advised to wait for a red candle, or if you want to enter a call sell position, you have to enter it, let's say, with a very small stop loss because you don't want to be held at the wrong side of the trade. Okay, so we are currently seeing a sharp reversal from the resistance level that we had marked earlier. Now we'll wait for some time to execute a call sell position to hedge our position properly. Okay. So there are two important things that we can see from the chart here. That currently, let's say we are earning approximately 10 rupees in premium, that is approximately 250 rupees. So as you can see from the chart here, even though there was a sharp pullback after we entered into the position of a put sell, we didn't face any backlash of the price increasing above the price at which we sold at. So that can be attributed to the IV crash after the RBI incident. That even after the sharp pullback, we didn't see the option price around the price at which we sold at around 53 rupees. It is currently trading at 40. Okay, so these are some of the ways in which KEEV can help you. You can use a charting tool and you can deploy your trades. It can be buy, sell, limit order, or a market order for any stock price. I'll show you a quick example. Let's say ICICI Bank I'm seeing here. I can see from the 5-minute chart that it is a bullish momentum. Let's see the hourly chart. From the hourly chart also, I can see that it is currently rebounding from a support level market for you. So currently I'm seeing that for at least a short period of time, ICICI Bank would be in a bullish momentum. So if I want to execute this trade, just from this chart, I can just click on buy and then place order here. It can be intraday or a delivery. And we can see that the price here will change as the market price will change. Quantity will be different for everyone. For example, getting in 10 years. I'm not going to place the order, but I'm just showing you how the order can be placed here. So this is how our order is placed. Here we'll see the order being placed. So this is one of the ways in which the KEEV platform will help you. At the same time, you can use different features of KEEV. That is, if you have a strategy or if you want to make a strategy, then you can create your strategy here and you can backtest it to see whether the strategy has performed well in the past. We have the last 3 years data, and you can backtest for whichever time frame you feel necessary. And so to see how the strategy is backtesting, we'll give a link to the video below in the description below, and you'll see the different videos that we have made, and which will show you how your strategy will be backtested. At the same time, you can, as I showed here, the option trading part. Here we'll be able to see the live payoff and the proper option chain that is currently being seen in the market. So here we are seeing the live option prices. So here our position is currently in profit as we had sold it at 52. 52.95 is currently trading at 36. So we are at a profit right now. So the live prices of the option chain can be seen here, which is also important while taking any decision. We can see that the current ATM is around 44,400. Now we want to enter a position of a call sell to hedge our position properly. So we can see from here how the premiums of the call side are. So it is, as you can see here, that the call side premium are a bit higher as compared to the put side premium. This is important because usually whenever in the previous scenarios or in the future scenarios, the put premiums are higher. But we can see a clear bullish momentum in the market because of which the call side premiums are higher. So let's go back to our chart and see whether there is a still whether we can see a setup in which the call side position can be entered, the call sell position. Okay, so we can see here clearly that the market is still trading on the in the upside. So we'll try to add a few indicators to see till where can the market continue to move. It is very important to clear today's high because below that we'll continue to see a range being formed or a bit of a bearish sequence being followed now. Because if today's high is not broken soon, then it is not a bullish signal continuation. We are tracking this position with super trend and with EMS. So here we can choose to trail our put sell position in two ways. We can trail a put sell position with the 9 EMA, with the 21 EMA, and with the super trend. So currently, as we have seen that we have created a put sell position in Bank Nifty at 52 rupees, and we are currently earning approximately 20 plus rupees premium on it. That is approximately 580 rupees. It is important also to note that today is the expiry. I'll keep saying this again and again because the option that we have chosen to sell is the OTM option, which will expire at 0. So let's say we want to hedge our put sell position by saying that if the Bank Nifty spot price or the Bank Nifty future price falls below if it closes below the 21 EM, then I want to exit my put sell position. Now this can be important, or you can say that super trend. if not 21 if we see that this is the pullback that we want to follow, then we see that the super trend indicator is the closest to it. So if I want to give an indication that I want to trail this till approximately 44,400, below that I'll close my position. So we can execute that in the following way. We'll make a strategy here. You can name it whatever you want. So this will be a short strategy because we are currently long. The interval will be 5 minutes. The chart share will be candlestick. The sell entry is very important because the sell entry is uh, from the chart here. So as we remember from our chart here that we are trailing, we want to trail this position from the super trend point of view. So we are currently seeing the maximum that the Bank Nifty could pull back today, or for the time being, could be around 44.20 to 44.15 levels. And we want to hedge your position in a way that if it falls below that, if it falls near or below the super trend, I want to close my put sell position because I think that till that time, we'll continue with the bullish momentum. Below that, there can be a short-term bearish momentum. The sell entry is important because here we are telling the system that we want to exit our trade. We want to exit our bullish trade. Super trend crosses above close. So let's see the chart here. Super trend crosses above close. So as you can see from the indicator here, that this is some of the mistakes that we also do, but this is how we should see it when we read that statement. That super trend crosses above close is a bearish signal. That whenever the close is below the green line, the super trend will move up. So this will be followed by a bearish sentiment in the market. Yes, done. So I don't want the stop loss or the trailing profit for this position, as I'll be closing the position. So I'll just be putting a random number here. So like example, I want to, because I'm currently trading Bank Nifty, I'll just say Bank Nifty June. Yes, I'll see how the backtest result of the strategy here. Even though my end goal from the strategy is to close my position. Will we wait for the backtest result? Let's check the chart. So there are two things to note here. From the 500 chart, we can see that there are rejection from this position, approximately 44,500. As we saw from our daily and the hourly chart, this is a resistance for the Bank Nifty. From the 44,500 position, we are currently being rejected twice. So if this happens for the third time, that is a resistance confirmation. So once the resistance is confirmed, we can sell a 44,700 or a 44,600 position. So let's check the prices of the 44,500 or the 44,600 call side. So currently it is trading at around 44,600, 44,500 is trading at 58, 57, and this is trading around 59. So, and our existing position is trading around 34. That is also in profit currently, around 500 rupees. This is the backtest result. We can see that overall this is a very profitable strategy. Let's click on run live because we want to use the strategy to exit our position. We'll take this interval for 1 day and we'll be using options here. We want the price to be based on the future. We want it to be a market order only. So that is proper. I don't want any rollover because today is the expiry. I'm trading for today's position. So here is the put side. So here, so as we are seeing from the chart here, that Bank Nifty is currently moving on the upside. But at the same time, there is a small possibility that it can see a resistance here. So as we saw earlier from our daily chart, this is the red lines are exactly where Bank Nifty was reversed from our previous points. That is around 44,525 and 44,645. So currently Bank Nifty is trading around 44,500. So there is some possibility that there can be a reversal from here. And to benefit from this view and to benefit from this chart and this current setup, we'll sell or call side to from the 5 minute chart. We can see that there is a high possibility that this is the pullback level around 44,400. So we want to benefit from the small downside move from here. So there will be small support from all these three levels. There will be the 9 EMA as I saw support earlier. That can be from the 21 EMA and it should be from the super trend as well. So let's sell a 44,600 or 44,700 call. Let's see what the current price is trading at. 44,600 is trading at around 30. 44,700 is trading at around 15. 44,500, that can be a bit risky But let's see the chart again. It is currently around 10:50, 10:49 on the expiry day. So there is still a good 4 hours, 20 minutes of market hours to go. So we'll see this position and we'll see this setup for the time being, and we'll try to see that whether the bearish candle or a bearish sentiment is being brought up. If the setup comes, then we'll execute a call sell trade from here. So as you can see here, that Bank Nifty is continuously being rejected from this level and continuously finding support at 9 EMA. So it is important to enter into a position after the 9 EMA support is broken. So we'll wait and see till the 9 EMA or the resistance level is broken, and after that there will be a more directional sense to the market, and it will be a clear picture of where the market is trending. So currently, from a broader point of view, I can see that this range is being set right now. That is approximately a 100-point range, and for the time being, it can trade here. And from here, we can check the spot price that is going on right now. You can see that the spot is trading at around 440. So I think a call sell of 44,500 is the sensible and the prudent idea. But it is also, we are waiting for a confirmation below the 9 EMA right now. You can check your open position from the open position tab here. I'll refresh to show you. From the order book, you can check the orders being placed. From the open position, you can check the open positions here. It is currently trading at around 26, and we are earning approximately 26 rupees in profit. That is around 650 rupees right now. Now, the point of KEEV and the point of automation is that you don't need to wait for the 9 EMM candle to be broken. You can automate your trade here. We can see that we want the exposure to the bearish sentiment, and we can get that exposure from key viewer. So as we saw from our strategy made, that we can either make a 9 EM or a super trend strategy. We have currently made a super trend strategy. We'll make a 9 EM strategy as well. We want the exposure to a short position here, because we want to look for a bearish signal. So we want to enter our trade when the 9 EMA is broken. So we will type EMA here. We want the EMA to cross above the close of the candle. We want the 9 EMA. So currently, as you can see, there is still getting a resistance from here and getting support at 9 EMA. So as soon as the strategy started, it will be beneficial for us. I'm not taking any take profit or stop loss for this position because I want to start a new position here. So I'll just run a June and just run a quick backtest to see how the strategy has performed in the past. So then we'll check whether the chart is following our earlier set principles, earlier set rules. You see that the 44,500 is still being protected here. Okay, so from the backtest result also, we are seeing that at least for the at least for the past 3 months, the strategy has performed well. So we'll quickly run live. I want the option, yes. I want the price to be based on the futures because our chart is futures right now. The rollover is false because today is expiry. The C, and I need to sell the C because this is the position that we want to run. When the spot price closes below this 9 EMA, when the future price closes below this 9 EMA, I want to sell the ATM C. That will be around 44,500. Expiry current, one lot only. I'm not going to add any leg here. This is a simple strategy that I want to deploy. I'm not going to add a stop loss for the current time because it will just make the strategy a bit more complicated. So for the time being, I'll just keep it like this. And I'll click run live. Live trade has started successfully. You can see from the strategy live part here that it is currently it is waiting for its trigger. As you can see from our chart here, it is there. There is a small possibility that it will be triggered with this candle or the next few candles. So we'll keep this on till this call sell is triggered. Till then, we'll recheck our position whether view details. I want to sell. I want to enter this position of when 9 EMA crosses above close. So when 9 EMA crosses above close, okay. So I started take profit as 0 because I will manage that one by one. Yes, so this makes sense. I want to sell the ATM series on this happens. I want a bearish exposure. Yes. So currently, as we saw here, that this reversed quite substantially. Now there can be, so this is the point of automated trading, right? Because you have set a clear principle that you want to enter this trade if and only if the 9 EMA is broken. So you have set that principle on your screen as well, on your system as well. So this is where it is beneficial to us. We are minimizing the emotions that are contributing to the loss or that are contributing to your trading ideas, and because of which we are trying to reduce the risk here. And I think this is a very good and very lucky example that we are able to see it here. That even I was tempted to enter into a call sell position here, but I told myself that we have a system for it. We'll create the strategy on the system. We'll create the strategy of close below 9 EMA and we'll enter that. Because here we are seeing that it was being rejected here. It was taking a support here. So if the support is not broken, then there is no point in entering the bearish sentiment. As we can see that there is a lot of volatility in the market right now. It is again being rejected from these levels here. So there is a high possibility, but you can see that the volumes are not that high right now as they were during the uptrend here. All this information is important when you're executing your trades. We can see that the range is narrowing, the resistance and the support range is narrowing. So either side there can be a breakout. Till then, we'll track our open position. We're currently earning approximately 73 rupees. That is approximately 30 rupees of premium here. We'll keep that position on till we get a signal that the super trend is getting broken, or the support that we are seeing here, the pullback level here, is being breached. So we'll take this up again when we are ready to enter into a new position. Till then, we'll track the chart. Hello everyone. So as we saw earlier, when we were at this candle, that we had created a strategy where the call cell will be deployed when the 9 EMA is crossed. So as time passed, the range of the resistance level and the support of 9 EMA got narrower and narrower. And in the earlier candle, as you can see from the time here, the 11:15 candle, this gave a breakdown. So the close was below the candle at 11:15. So let's check our order from the order book. So as you can see here that it was deployed at 11:20. So this was deployed when we got the confirmation of this candle or of this candle open. That at 11:15 close and at 11:20 open, this was deployed. So here, from our conditions, that the ATM call should be sold. So from the open positions here, we can check that the ATM call that is around 44,500 is sold. Current ATM as per the system is 44,500 because we had kept the ATM should be based on the future prices. That is around 44,500 right now. So this is the open position right now. We'll check it with our broker as well. We currently have a this is a 44,200 and a 44,500 strangle. We have given it a 300 rupees range and we have sold both of them at around a premium of 108, which is currently trading at around 77, and we are earning from the same. So let's check the payoff if we can, or the break even of this trade. We'll go to strategy. We'll select the short strangle here. We select a strike prices 44,200 put, 44,500 call, and we'll cross check it with our order book. As what are the prices of the same? This was sold at 56.6. The call was sold at 56.6, and the put was sold at 52.95. We can see that the break even from this trade is around 44,000 and 44,600, and we can keep track of our position from here. We'll earn the maximum profit of around 2,700 till the market is in this range that we had selected, 44,500 and 44,200. Now we can see that a more clearer horizontal resistance has been formed. Now we can see from this screen that the more clearer horizontal resistance is formed. So we'll mark it here for 44,520 approx. Good resistance. So it has clearly broken the 9 EMA support. We'll see how it will perform with the 21 EMA now. So as you can see, after the 9 EMA, it is taking support near the 21 EMA. Moving forward, we'll check. We'll keep our position and check, and we'll see whether any changes or any adjustments are to be made here. Just to give an update on the position, as you can see that this is how the Bank Nifty chart has progressed. It is currently known right now exactly, and we can see that after the breakdown here, according to our system, we had entered into a call sell position at ATM that is around 44,500. And at the same time, we're currently also holding our initial position of a 44,200 put sell. So as you can see from here, as you also saw from our earlier previously backtested result, that this is actually a profitable strategy whenever it has been executed in the past. So the current bearish sentiment in the market has sustained, and it has currently dropped below the today's high, today's opening range that was around 44,400, and the low was around 44,350. So currently it is forming extremely bearish signal till so this is the next support right now around 44,300. Looking at our current position, let's check that out first. How our position has performed till now. So we can see from here that our put is in a short, small loss of around 50 points, around 50 rupees. That is around 3 to 5 points. And at the same time, our sell position, which was executed at 56, is currently trading around 13. That is around 1,000 rupees profit. So we'll have to track our chart closely to see whether there is any reversal or the continuation of our trend. And if it continues, then we'll have to exit our put sell position. So as we can see, currently the time is around 1:10, 1:11. Just giving an update on the trade. As we saw earlier that we are holding two positions right now. That is a 44,500 call sell and a 44,200 put sell. So after the previous short, we can see that the Bank Nifty price has fallen. But as an option seller, we are not concerned with these drastic price falls that are approximately 100 to 100 points. We just want to know whether our position has been maintained and whether our position is still in profit or not, and whether the range is broken or not. So just let's look at the open position right now. We can currently see that we are earning approximately 1,200 rupees from this trade. We will cross check it with the broker. Yes, it is a similar same price going forward. So we can see that we sold the 44,500 call at around 56 rupees as it is triggered from our end, and we currently it is trading at around 9 rupees. And because the market fell a lot, the put that we had sold at 42.95 is currently being traded around 51. So, as if from the previous video, you might have seen that the put was trading around 22 rupees. But because the market fell a lot, this has increased. But so based on from the option strategy here, we'll check again the break even from our strategy that is created short triangle. So here we'll just write our 44,500 call in the 44,500 put. 44,200 put. So we are currently holding this position from 42.95 and 56.6. So we'll check the KEEV and we'll check the break even. So the break even on the trade is approximately 44.1 to 44,100 to 44,460. And the margin required will be approximately 1,20,000 to 1,50,000 based on the broker. Just checking our position again. Now it is currently approximately 115. From now onwards, there is going to be some premium decay because these options, as they are currently OTM, they have to expire at 0. So based on the chart here, the position is still currently out of the money. Both our legs are currently out of the money. So they have to end at 0. So this is where we are going to own. And based on the prices that we have chosen, that is approximately 108 rupees, we will approximately be earning 2,500 to 2,700 from this trade, barring the taxes and the brokerage. So I'll keep you guys updated on the position, and we'll from the next part onwards, we'll see how the position has how the position has changed and whether there are any drastic moves, which is why we might so before squaring off we might have to adjust our position as well. So we will see how the market behaves from now. Just giving a quick update on the situation. Currently it is 130 and the spot price is moving around 44,250 and the future is moving around 44,380. So we had already sold the 44,500 call at around 56, from which we are earning approximately 40 rupees right now. And so there is very less chance that 44,500 will expire ITM. So we'll earn more 10 points from here. But it is also so the from the chart it is also visible that 44,400 might also be a good level. So currently, I'm planning to sell this position and close the 44,500 position. As you can see here, we'll place order. First, I think first order that we'll do is we'll square off our 44,500 position. From zero, we can see that the 44,500 we have deployed it under NRML. That is a delivery. So we'll close off our position from here. We'll buy 44,500 at market delivery and we accept the terms and conditions of the trade and place order. So the order has been placed successfully. Now we'll check it in zero down. We can see that our position is closed and we have booked a profit of around 1140 approx. Then so we want to get a bit more aggressive. So we'll sell strike price of 44,400 call, 44,400 call, sell and place order. Now we'll take it for intraday and place order. So we'll just check our order book once. So we can see from here that we have sold it at 21.75. We will cross check from here. We can verify that it is being sold at 21.75. Now the chart is similar to what we saw at the last one. Now I'll update you in the next part with managing the position if there is any. Hello everyone, just updating on the position. So currently we were holding two positions of the 44,200 call sell and 44,200 put sell and 44,400 call sell. So now we saw that there was a severe drop in the price of Bank Nifty futures, as you can see from the chart here. That there was a sudden fall. This triggered our stop loss, which was placed near 44,200, near 44,350, and because of which our position has been exited, as you can see here. So we'll check from our orders. Our position was exited at 58.2. So here we booked a loss of approximately 131 rupees. But at the same time, we are still earning profit from the 44,400 call sale of approximately 300 something rupees. And there is still some possibility of further profit here. Here, based on the chart, we can see that there can be some further pullback from this position. To get exposure to that, we'll sell the 44,100 put through KEEV market place order. So here we can see that the order has been deployed. 44,100 put and 44,400 call. This is the current position. And we'll keep a check on that through our charting tool here. I'll update this when we square off the position or any more changes we create to the straddle line. Just updating on the position here. So as we can see from the chart here, the current spot price of 44,200 and 44,340. And the position that we have open right now. Okay, so we have two positions open right now. That is a 44,100 put sell and a 44,400 call sell. So currently, as you can see, that the 44,400 call sell is trading around 44,400. Also trading around 6.5, and we can see that the maximum earning potential for this is also very less. So rather than to keep the capital deployed and to take the additional risk, we'll square off this position. So we'll just take it here, 44,400. We'll buy that and we'll square out the position and we'll cross it from a broker. Yes, that position has been deployed and we have closed the position. We'll check the price also, 6.35. That is around the current price. And yeah, so currently we are holding only one position right now. That is the 44,100 put sell that is trading around 25 right now. We have sold it around 23.7. So I'll update you on the change when if there is any or if I square of this position. Okay, so we can currently see that the bank FT prices have fallen a lot. It is trading around 44.80. It has crossed below the threshold of 44,100 as well. So we'll close our position. So we'll place order and we'll see whether and we'll see if the order has been executed properly. And yeah, we can see that the position is closed here, and we have earned approximately 0.5% from this expiry. And we'll 44,000 put is trading at around 20. We'll sell that position because 44,000 is an important support level. So as you can see that we executed this trade around 19, it is currently trading around 16. We'll keep a check on the price from the chart here. We'll open the chart price to see how the bank Nifty is trading right now. The spot is trading around 44.60, and from the option chain here, we can see the current price of 44,000 put is trading around 16. Because today's expiry, any small reversal will have an immediate effect on the 44,000 put here. You can see that the current price of the spot bank Nifty is trading around 44,100. But because of our rule that once the support is broken, we'll have to square the position. We had to square off our position. So here currently we can see that the spot price, the option strike price is trading around 10 to 12. And here also we can check our position. We are seeing as we are getting closer and closer to expiry, the OTM strike prices are moving to zero. OTM put prices, it's the same with the OTM call prices. We are seeing a bit of reversal in the spot price right now, trading around 44.50. Because of expiry today, the volatility was very high. Because of which it was a bit difficult for an option seller specifically to trade here. To trade on this expiry. We can see that the future spot price is moving towards 44,000. A break below 44.20 will force us to close our trade. So we'll keep the setup here. We are waiting for the candle. We are waiting for the 5-minute confirmation. So we'll wait till 3.5 to see whether the break near 44.20 has been achieved or not. Again, we are seeing a small and quick reversal in the bank Nifty spot prices. So here the 44,000 put is trading around 12. So I think to just close over the position and to not be to close of the position and to I think bank Nifty as you can see is currently consolidating around 44.70, 44.55. So I think to reduce our risk and to close out the position as it is particularly a volatile day for bank Nifty, we'll book the profit and we'll exit the trade. As you can see from the broker account, we have exited our trade and we have closed the expiry trading for today. Okay, so this was all for today's video. So this was basically to help you understand how KEEV can help you to execute your trades properly. As we saw in one of the examples, you can execute your option trade even through an indicator-based strategy. And so this is just to show you how the whole day of trading in KEEV can be done. Hope to see you all in the next video.